Welcome everybody. This is the trade entry webinar. If you are looking to learn more about trade entries in the futures markets using the Viper tools, you are absolutely in the right place. You pay the right price. Here is our standard disclaimer. Let's knock this out and get over to some charts, which is the reason everybody is here. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Most excellent. All right, let's get over to screen one here. Kick this puppy off. Tonight, I'm going to start with the Russell. Most of you know, of course, this is by far my favorite instrument. We do have a lot of new people visiting us and what have you, so I'm just going to literally take 2 seconds and give a really quick orientation as to what you're looking at. So what we do here at Viper is we trade intraday movement of the futures markets. The primary markets we trade are as follows. We trade crude oil. We're going to see a chart of that in a little bit. I trade ES, and I try to call it a little bit in the room. That's the E-mini S&P, 1250 a tick, September contract. All the equities are on September contract, including crude. Crude oil is $10 per tick of movement. Gold, we trade $10 a tick. I occasionally trade NASDAQ. This is the E-mini NASDAQ futures. And then you're looking at the Russell, E-mini Russell, $5 a tick, and we'll look at the E-mini Dow, which is YM. Okay? So the most prominent thing you can see on here is the indicators that we have from Viper. They are as follows. We have background colors, green and red. Green is generally when you are in an uptrend. So you're generally going to have predominantly blue bars and a green background. And if a market is selling off in a downtrend, you're more or less going to have a red background. And you can see that the mid band here, the large middle band, and all the bands around it stair step down in a downtrend. And when you're going up, they stair step up. There are occasions where a market will go sideways. Now, the characteristics of a sideways market are as follows. You will not be getting higher highs and higher lows. The highs and lows will remain about the same. Let me show you some examples of a sideways sort of range-bound market. Here's a good example on the Russell right here. Support more or less down in this area, and resistance more or less up in this area right here. Now, the characteristics of how we trade a range are different than how you trade a trend. And we're going to talk about that in a little bit too. So markets oscillate between periods where they're going up in an uptrend, down in a downtrend, and sideways. And so it's really important. The first thing we got to do when we try to sort out what we're going to do in trading is to first determine the market condition. Are we up, are we down, or are we going sideways? Let's do a couple exercises together. I'm going to pause this thing here, and I'm going to show some examples of, and I'm going to just make sure everybody's awake. You had your cup of coffee, you had your espresso, and I'm going to lob a couple of softballs up at you and see if you can hit them, okay? Let's work together, and we're going to start off by identifying what the market condition is. We're going to do up, down, or sideways. I'm going to do a series of screenshots. And then we're going to talk about how to trade it, okay? All right, here's the first one. This is the Russell the other day. And each one of these is going to be 5 second timing on the quiz. So you type in a U for up, D for down, S for sideways. So in this particular morning was the Russell going up, down, or sideways. Four seconds left. So all you got to do is type in a letter. Just a U, a D, or an S. That's all you're doing. We're not calling trades or anything just yet. We're just getting you to recognize the market condition. Up, down, or sideways. 2 seconds left. Make your call. Yeah, and we're looking basically from over here to, over here. So what was the predominant? Was there a trend here, and was it up, down, or sideways? Okay, 2 seconds left on the clock. Get your call in on what you would do. If you're just coming in, we're just kind of still getting started a little bit. We're doing analysis of market conditions, up, down, or sideways. That's the first thing we do when we analyze markets. Okay, time's up. Yeah, everybody got this right. The market's going down. So the characteristics of a down market, in fact, it continued to go down the whole time pretty much from, it was a big sell-off here. Sell-off actually started way back here. Okay, so let's briefly, before we go to another chart, talk about how you trade this, right? So we are retracement traders. What does retracement trading mean? We trade pullbacks. We don't trade the thrust moves. So in the case of a downtrend, we know that the trend move is down. This is called the thrust part of the move, or the push in the trend direction, yes? And then you get a series of what do we call retracements. Some are pullbacks, different names for them. Sometimes they go to the mid-band and roll over. Sometimes they go a little deeper to the outermost band and roll over. Sometimes they go a little bit above the mid-band, just above the mid-band a little bit, and then roll over. You get the idea. I'm not going to do every single trade here. You get the idea. So you get in on the retracements. Retracements. You're getting in short. The trend is down. You're shorting rollovers, taking profit when it bounces. Short covering, just like everybody else is doing in the market. Okay? All right, perfect. Everybody got that right. Let's tee up another screenshot here. See if you can make the call. All right, you ready? Okay, here's the next one. 5 seconds on the clock for you to make your market analysis call. U for up, D for down, S for sideways. And we're looking at this chart between right in here, and the question extends to over here. So in this area right here, what was the market doing? Was it going up, down, or sideways? 4 seconds on the clock. Get your call in. 3 seconds. Up, down, or sideways? 2 seconds. All right, time's up. Up. Yeah, everybody got that. This is an uptrend. Background is green, higher highs and higher lows. Bars are predominantly blue. Mid-band and all the bands are stair-stepping up like you're going from the ground level of your house or building to the second story and the third story, right? Good. Uptrend. Now, when we're in an uptrend, we predominantly sell or short the market, right? So we always trade the thrusts. So we'd be shorting this thrust right here, right? So here's a good example of a short trade in an uptrend. You always trade the thrusts in an uptrend, right? Is that how we trade this? Here's a thrust. We're taking a short, right? So here's a thrust. See, the uptrend is the opposite of the downtrend, so we do the opposite, right? Isn't that right? So we short here. This is the big move. Short. All the shorting all the way up, right? You're getting your words mixed up. No, you're wrong. Good. That was a pop quiz to see if you guys are awake. You guys, everybody's awake and send them nuts. Okay, good. Right, so we are retracement traders, right? So, okay, so good. So here's the thrust up. Background turns green. Bars start stair-stepping up. We never buy or sell the thrust move. That is the up move. We have to wait for a pullback, and we get it right here. Come right down, sit right on the mid-band. This is our favorite type of trade. Don't worry about the details of getting in and out. I'm going to cover that tonight in a little bit. Right now, you have to start with sort of the 10,000-foot view of the market. That's the way you do it, right? That's the way you do it. You look at the big picture. What's the market doing? Are we going up or down or sideways? And how am I going to trade it? Once you know the market condition, you automatically know how to trade it. In an uptrend, we trade pullbacks. Here, for instance, it came down. All these little kisses of support underneath the midband were opportunities to buy long, buy long, buy long. Another kiss of the midband here. We'll talk about shallow retracements in a couple of minutes. Here's another pullback. Here's another pullback. These are all long trades. Perfect. All right. Next one. In fact, I'm going to pull a different market up here and ask another question. Okay, here we go. Hey, quick show of hands. How many of you trade ES? Show of hands from the team here tonight. How many of you trade the E-mini S&P? Is that one of the markets that you trade, yes or no? Show of hands, any ES traders? Yes? Oh, wow, quite a few. Okay, cool. Mario, Van. All right, we got a few ES traders in here. That's pretty cool. Good. Hey, do you like that I call it in the live room? Does anybody pay attention to those ES calls? Are you looking at the charts and following along when I try to make ES calls? Show of hands. Anybody? Oh, good. Yeah. John, Mario, Van. Okay, quite a few. Okay, well, I'll continue to do them. I will absolutely continue to do them. Okay, so here's an ES chart. I think this was from late in the morning today. Here again, up, down, sideways. You're making a market condition call. 5 seconds on the clock. Up, down, or sideways. U for up. Just got to type a letter in. D for down. S for sideways. What say you, team? 4 seconds left for your call. Here, I'm gonna toggle on the predictors. That might help you a little bit. There you go. There's the predictors. See if that helps you out a little bit in terms of your view of the market. 2 seconds on the clock. Make your market analysis call, please. Ooh, some good answers coming in here. I'm going to give some total gold star kudos to a couple of you. 2 seconds, make your call. What's this market condition right here? We're looking predominantly from here to over here. Right in here. What is this? Okay, time's up. Now, all right, okay, so everybody said sideways. However, there was a handful of you who put sideways to down, namely Mario, John, and Brian, and Dan. Wow, there's quite a few that said sideways to down. Yes, good. So that leads me to the next question. If you say it's sideways or sideways to down, what is your primary mode of entry? Let me help you out. What I mean by primary mode of entry is, are you shorting the market here when it comes up and rolls down, or are you buying the market down here at support? S for shorting. Are you shorting it? When we say primary mode of entry, that's your primary entry point. Are you shorting the top of this market? Here and here and here? Here? Or are you buying support? Like when it comes down here, are you buying support? Right. Sideways to down markets, sideways to down, when the resistance levels are fairly clear and the support levels are fairly clear, you are shorting the market. You're not buying down here. You buy to cover. You're not getting long down here, right? You're just buying to cover. You're short from upper levels. You look to buy to cover to get out. You're short from upper levels. You buy to cover to get out, right? That's how you trade this market. It's sideways to down. Okay, so this is not buying. This is short covering opportunity. Good. Everybody got that. Couple gold extra stars on that one. Tell you what, let's pull another one up. We'll do one more of this exercise, and then we'll start looking at trade entries, okay? All right, I'm gonna make one a little bit tougher. Let's get old Spazzy up here. Show of hands of anybody who trades NASDAQ. NASDAQ traders. Show of hands. That's NQ. Anybody trade NQ actively? Couple? Eddie and Robert? Okay, cool. All right. You're gonna like this one. You're gonna like this one. This is Spazzy at its finest. It's going into the close today. Spazzy is a spazzaroo, isn't she? Good for you. All right, here we go. Now this is NASDAQ from late in the morning into the close today. The close of the market is 1:15 Pacific time. So I'm actually showing you right at the close today on NASDAQ. Ready? One more market analyzation quiz. 5 seconds on the clock. You make the call. What is the market condition on NASDAQ right here? D for down, U for up, S for sideways. You make the call. Some of you might think this might be a trick question. It sort of is, huh? When you look at the chart, it's not. This one's not so easy, is it? Not at all like the other ones I showed you, is it? See why we call it Spazzy Nazzy? Three seconds left. Get your call in here. I know it's a tough one. It's quite spazzy. I know. I see it. Some of you, that's why a lot of you don't want to trade it because it's too spazzy. Give you one more second. Okay, time's up. Well, let's see. I've got quite a few interesting answers here. Let's see here. Down, 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 sideways to down. Sideways to down, lower highs. Mario says, I don't trade any NASDAQ. I broke up with her. Greg says down, then consolidation, then down again. Okay. All right. So this is the challenge on NASDAQ, is that it doesn't play by the rules of the other markets. The other markets tend to establish support and resistance levels. And then you can see, like the prior example on ES, it respects those levels pretty well. It might pop them a little, a few ticks here and there. But for the most part, you can pretty clearly see what you should be doing in terms of getting in and out of those markets. They move slower. They're easy to make trade calls. Here, for instance, you could make the case that the overall trend on this chart is down, and I would agree with you in the fact that all the way down here, you're getting a series of lower highs and lower lows. So the trend is definitely down. Now, in order to trade it, you're going to have to deal with these very spiky sort of retracements where they push up. They come down, they get a very quick, short burst down. And then this is what NASDAQ does. This is the nature of this instrument, and then it spikes right back in your face. It's like riding a crazy bucking bronco that just sort of takes off, and you get a wild ride, and then it just tries to kick you off in the dirt. Here's a big spazzy down, big push up. You're thinking the trend is changing, rolls over, but bam, more short trades. So sideways to down, definitely. I think you really pretty much wanted to be trading the short side of this market when it was in this condition. Now, here's what's interesting about NASI. It'll go through these periods of just sort of punctuated choppiness. But then look how it ended the day. Watch what happens here. See, there are times when NASDAQ will start to behave itself. See, hold on. Notice over here. right after this last gasp down to the swing low of the day, now you start to get a very pronounced uptrend. And occasionally NASDAQ will do this. If you want to keep an eye on it and make sure that it starts to behave itself, then you can step in and start to look at taking some trades. So here's obviously went into a very pronounced uptrend. Okay, side pop quiz. Ready? Gonna see how many of you know this. Is this area right here an acceptable long entry, yes or no? Just type in a wire in it. That's all you got to do. You don't have to say where you would take the trade. We know it's a long trade because it's up. Background's green, bars are blue, we're stair stepping up. We know it's a long trade. So, does anybody remember the conditions, the minimum criteria to get into a retracement long trade? So it's a very simple question. Is this area meet the criteria for an acceptable long, yes or no? Right here where my cursor is circling. You got 3 seconds. A wire and in. Tomorrow morning you see this pattern. Would you take it long, yes or no? It's really simple. That's the question, right? Would you take that long? Right here. 2 seconds. 1 second. Right here. Long, yes or no? Minimum criteria. Time's up. Yes. The answer is yes. So if you recall, our minimum requirement to get long is twofold. You have to break and close below the stealth line, which, as you come to learn our indicators, is this little sneaky snake line. When it's going up, it's green. When it's going down, it's red. That's the stealth line. That's some of the original indicators that we got. Stand by 1 second, please. We've had the stealth indicator forever. That's like, go back 9 years, you'll see stealth on the charts. So it's very helpful. You know, it helps with trail stops, helps with trend identification. So the first part of the criteria is it's got to close below there. And can you see this thin line right here? This is called line 6. It is the outermost part of the sixth region. 1, 2, 3, 4, 5, 6. 6 is at the top of it. So if you notice this little set of candles right here, they close below line 6 and they close below stealth. Check mark 1, check mark 2. Yes, long trade entry. That's the minimum for it. Can't go any lower than that. So for instance, over here, is this a long trade entry? These bars right here? How about these bars right here? Is that a long? What do you think? It's breaking stealth. Check mark 1, right? Check mark. What about check mark 2 over here? No, right. No. That's not deep enough. How about here? What do you think? Long entry? Yeah, right. Check mark 1, stealth close below. Check mark 2, stealth. There's line 6 close below. This was a valid entry. This was a valid entry. This was not a valid entry. Good. You're kind of getting the hang of this stuff, huh? You know, when you look at a bunch of charts and you kind of look at some of these patterns, it starts to be a little less confusing. And the main thing you want to do when you're, sort of in the beginner, intermediate stage of learning to trade, the main thing is to learn the terminology. When you're in just very simple things: up to trend, downtrend, sideways, retracement to support, retracement to resistance, taking longs and shorts, and where to get in. Once you sort of once you get that sort of figured out, then you can get into like managing trail stops and putting in, to targets and all manner of other things and managing the trade. But the critical thing to get down in the beginning, even as you're learning and continuing to grow as a trader, is the entries. You got to see and master those entries. Because let's look at this way: if the entry is all messed up, then what does the rest of the trade matter, right? I mean, if you got in super late, you got in a bad place, you get stopped out, that's a bad place to be. 1503 Fuller. 1503. No, well, I wouldn't call this, Robert asking about, I think you're asking about this area right here, right in here. That is a legitimate entry. Check, close below, still check, close below line 6, double check. But did you get filled? Did you get filled long? Did it ever close above your box? No. Now, it went a little bit lower and kissed the midband. Is this a valid entry? Yes. Is this a valid entry? Yes. Are all these kisses of support in an uptrend valid entries long? Yes, yes, double yes. All of these are valid long entries right here. But this was not a head fake because it never filled long. Everybody see that? Okay, cool. You're getting the hang of this stuff. All right, let me pop another chart down. We're going to do a different exercise now. I think everybody's starting to understand how to see the market condition. And so the next logical step in the progression is going to be to see a trade entry and try to emulate that as if it was happening in real time. So what I'm going to do, I'm going to take a YM chart. Okay. I'm going to take a YM chart and I'm going to advance it. And you type in T. Well, if you're having trouble boxing it, you can put limit orders in there. Even with a limit order, Robert, it never got filled. If you put it at the top of the collection of those candles. You put limit orders down at and I'm talking about the last chart. I'm teeing up another chart right here. Yeah, so you got to be careful how you play that. And the time of day, of course, makes a big difference too. Okay. All right. Now we're going to look at YM going into the open this morning. Okay. You don't have to tell us what type of trade this is, long or short or stand down, whatever. But whenever you see the trade set up that you would take, you would type in a T. Okay. I'm going to advance the chart in real time, reconstructing the open on YM. And when you think you see a trade, you type in a T. Okay. Here we go. All right. So I'm not going to get into the market condition here. Everybody can see what it is. Okay. And so we're going to start. Don't say T right now because I haven't started yet. This is 5:37 in the morning. This is considered the pre-market period of time and sort of the tail end of the European session. So midnight Pacific is right here. Adjust that to your local time zone. The Asian time frame trading, active trading is here. The European session is after midnight. Okay. Sideways to up. I'll help you out with that, right? Sideways to up. All right, here we go. Now here we go. 5:37, 5:55, still pre-market. Equity markets open at 6:30. Let me blow this up a little bit. Okay, let me get the candles a little bit bigger. There we go. That's better. Okay, hold on, right here. Okay, we're at 6:08, 22 minutes before the market opens. Just really start to blow up these candles real quick here. Get these all blown up. There you go. That's nice and big. Big, juicy candles. All right, you're at 6. Let me get a cursor on this here. Tell you what time this is on YM here. 6:28, 6:29. So literally a minute or two before the equity markets open. There's 6:29 and 50. So this is the market open right here. These candles right here is the equity market open. 6:30, 6:31, 6:32. Okay, I'm going to stop it right there. Okay, now let's analyze this trade. First of all, before we looked at the open, we made a pre-market assessment that we were sideways to up. So sideways to up means that you are technically going sideways. However, you were coming out of what was clearly more or less an uptrend. So you're an uptrend, deep retrace. And so with that in mind, sideways to up, we look to buy support to get long. We're not shorting the market. We're buying the market to get long on retracements. Now, let's talk about this retracement. So in an uptrend, we know that the push in the trend direction is, of course, up. So there's a thrust up. Here's another thrust up just before the market opens. Double tops here at this 69 level. We all see that. And then it begins its retracement. Now, one of the trickiest parts of seeing and taking trades in any market, and especially the futures markets, is seeing in real time where to take the trade. Now, I don't think any of you, I'm trying to recall here on when you type in your T's, I don't think anybody typed in a T up here, and that was good because that's the thrust part. We don't trade that, right? Now, some early birds of you typed in a T when these bars formed right here. Now, let me ask the team for the early birds. Was that correct? Yes or no? Now, while you're pondering that, did the market fill it? So there's really two parts to the question. Was that a legitimate entry, yes or no? And did you get filled? It's a two-part question, right? Yes, it's a legitimate trade entry because close below stealth, check mark 1. Close below line 6, trend is sideways to up. You're getting long, check mark 2. But you never got filled. So while if you said this was a trade entry spot, you were correct, but it did not materialize into an actual trade. Everybody get that? Yeah, you see that? Okay, good. Now, a big chunk of you typed in trade when these candles started forming at the midband right here, and that is correct. That is the first opportunity to draw a region box using the object trader tool to look to take an entry long. A small handful of you typed in T's when those bars formed, and that was also correct, was this slightly lower dip below the midband to get long. In this case right here, the traders who drew this region box also did not get filled. That did not happen. The trader who drew the box under the midband with those two candles got filled long on the market close of that bar right there. The traders who continued to extend this box forward, and it sat here for a couple of minutes, so there was plenty of time to take this trade. Depending on when you actually drew, when and where you drew the box, you were filled on one of these candles right here. Long on it fires a market order in the close of the bar. Long, so you're long filled on there. Now you felt a little bit of heat, pulled it back against you a little bit. Your initial stop. Let's do some quick math here. I'm going to do this once. I'm going to explain the mechanics of the entry, and I'm only going to do it once because it's all the same, no matter what you're trading. Let's say hypothetically you got filled long on the close of that bar right there. Market order filled at 25,453. Okay. Now the default setting for the initial stops is 12 ticks below the entry. So that would be 41. So your stop would be right here. Initial stop. Now what we like to do is we like to do two contracts. And the methodology behind this is as follows. We take one contract and we pull off what we call a scalp trade. Scalp trade is generally around 6, 8, 10 ticks. Movement in your favor. So in the case of 453 fill long, you go up to 63, and this would be your first target right here. I'm going to take these away because that did not happen. And that didn't happen either. All right, so what happens is you're filled long two contracts. It pops up. You get filled on your first 10 tick target right here. Your two initial stops are sitting down here, 12 ticks below your entry. As soon as you hit that first target, you get your stop up 2-3 ticks behind your entry. Now you have a free trade. What's a free trade? What does that mean? Does that mean I don't have to pay any commission? I get the commission-free days. Is this Schwab day at the broker? 500 free trades for 2 years? Is that what we're talking? What does a free trade mean? I just said this was a free trade after it pops this, and this stop comes to within 2 ticks of your entry. What does that mean? Why are you doing all this? Huh? Why do we manage our trades this way? Why? What does that mean? What does that have to do with anything? The heck is free trade? It's the dumbest thing I ever heard, Charles. Makes no sense. There is no free lunch in the world, right? Now think about it. Let's suppose that this market, all of a sudden some weird news comes in and Trump says, I'm going to bomb Iran or whatever. And the next thing you know, the market just goes zoop. Just tanks, just rips. Now, in this condition, would you lose money? Would you lose any money if that happened? Well, you might get a little slippage on the fill on the stop, but no, you made 10 ticks here and you lost 10 ticks on this. It's a free trade. No matter what this market does, you make money. That's what that means, right? You make money no matter what happens because your stop is yeah, some people typed in you minimize your risk. That's right, Greg. You can only lose the 2 ticks. That's right. You can't lose any money. That's right, John. You guys all get it, right? That's a free trade. So this is the mechanics of how we want to manage pretty much every trade. Just like that. Initial stop here, filled on the close, in this case long. Get the scalpy target, get two lot on, scalpy target off at 10, and then get that stop up, and now you start trailing the stop. So in this case, you have a couple of choices. You can study your object, not object trader, you can study your instrument and say, well, typically before I get a pullback, the market generally runs, I don't know, 45, 45, 50, 60 ticks, whatever. And then you would put your second runner target way up there. Now, if you don't want to guess how far it's going to run before it pulls back, you simply turn on the trail stop on Object Trader or manually do it like such. Okay, see it moving up, see it moving up, see it moving up, see it moving up. Now, why am I showing you it moving up like this? Why don't I just put it right here? Or why don't I put it way over here? Why don't I just put it down here? I'll just stick it over here. What difference does it make? Just put it way down here somewhere. Why is it here? Why is the trail stop sitting right there? Anybody? Giving it some wiggle room. Let me ask you another question while you're looking at this chart. Is this area right here a legitimate long entry based on our criteria? Yes or no? Right here. Here, I'll give you a couple of them. I'll give you a couple, and you tell me yes or no. How about this one? Is that a long entry? Like you missed this entry down here. You just missed it. And now you're watching the market go up. Okay, how about here? How about here? This is a good one right here. It's a pullback. You said we're retracement, Charles. Retracement traders. This is a retracement. What are you talking about? Huh? Legit? You missed this? Pull the trigger right here. Pull the trigger. Huh? Here, let's do some more. Here, how about here? No. Triple no, double yo, quadruple no. No, 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 no. Check close below stealth, check mark 1. Close below line 6, no check mark. Same here. Same here. Same here. All right. So there are buy programs involved here that are pushing the market higher, okay? And so all the traders who saw the trade entry down here are riding that puppy up just like you are. We don't put the trail stops right on stealth and line 6 in an uptrend for those reasons, because there are opportunities where the market will come down and it'll just sort of sit on there and kiss it and then run another 20, 30 ticks. So you don't want to continually get stopped out on those little sort of micro retracements. You want to give the market a little bit of wiggle room. Now, that being said, after the market has run from 53 to 40, it's almost 100 ticks from here to here. It is 100 ticks. The whole move is pretty much 100. There's 100 ticks. Now, after a market moves 100 ticks in your favor, do you think it's smart to leave your trail stop sitting down here somewhere? Or you think you might want to tighten it up a little bit and start locking down that profit, like up here, as tight as it's ever been in the whole move, right? So when you get a huge move right out of the gate like this, and the thing runs 100 ticks, and you normally see it pull back after like 40 or 50 ticks, you're double the run you would normally get. You lock down the capital, the profits. Put that in the bank. So how much did the runner get? The runner got 53 to, let's use a round number here because I don't want to break out the calculator. 43 would be 90 ticks. I don't know, about 85, 90 ticks. So you got 10 ticks on the popper and 85, 90 ticks on the runner. So, 95 to 100 ticks. So how much on one lot was this trade worth? One lot's one contract. So it was a YM long trade. What do we say it was? 95 to 100. Let's just go with 95 ticks. 85 on the runner and 10 ticks on the scalpy. One lot, I got to put a number in here, equals what? Anybody remember how much Wyman is worth a tick? Anybody remember? So I got to put something in here. I got to put a number in here. Well, we used 2, Robert, on the entry. We got, if you recall, we got 10 ticks on the scalp. Yes, trailed the stop on the runner, and the runner got out at 85 ticks. So 10 plus 85 is 95 total. Excuse me. So what do I put in here? How about 475? Does that sound like the right number? Now, the other way to do it, and a lot of people do the trade with us for a long time. This is another thing. If you are comfortable with the risk and the return, you don't have to take the scalper at 10. Okay, you don't have to do that. You can put 2 lot on and just let it run the whole way. Now, in that case, you made $950 less commission. Right? Made $950 less commission. Now, let's suppose that you put 1 lot on and you made almost $500 right out of the gate, and you were only in this trade for like 10 minutes. Maybe 15 minutes. By the time you got the market open, you're up $500 in 15 minutes on one trade. Do you keep going? Would you just keep going, or would you be done? What do we call that? We call that one and done. A lot of people I know, a lot of traders all over the country, and their goal is $500 a day. And if you get that in the first 15 minutes of trading, you lock it down and you stop. Okay, let me ask you a side question. We're going to start looking at another trade. Think about this. Think about this. As you win more trades over time, and I need to type something in here, does the percentage of getting a loss go up or down? As you get more wins under your belt, you take a trade, you get a scalp. You take a trade, you get another scalp. You take another trade, you get a huge monster winner. You take another trade, you get another winner. Now you're up. You've had, I don't know, whatever. I'm just making this up. 5 trades, winning trades with no losses. What is the likelihood you're going to get a loss going up or down? The more trades you take. The likelihood of losses goes up, not down. The likelihood of a loss goes up. Every time you win, the chance of a loss goes up dramatically, yes? So that people never understand. People always say, well, Charles, I'm on fire. I can feel for the market. I just know I'm just going to clean up today. Sure, I banked $500. Yeah, that was nice. I get it. But, I could double that. I can make 1,000. I can make it 2,000. What the heck? I'm going to clean up today. I make $4,000 today. Look at these markets; they're going all over the place. Well, how many times have you got to pull the trigger and had a 1 or 2 like good killer trades right out of the gate in the first half an hour or whatever, And then you proceed to systematically give it all back. Show of hands. Okay, I got my hand up. I got my hand up. For years I did that. So I started trading a long time ago. That was my routine every morning. That was my routine every morning. Every morning. Get up, make a little bit of money, put it all back. All right. Let's do this. Why don't we pick another instrument and see what you want to take a look at. Tell you what, let's do one more trade exercise. I'm almost going to run out of time here. Let's see if we can get another trade. What do we want to see that we haven't seen? Type in an instrument and I'll take a vote. I'll take a poll of the team. Just type in what you want to see and I'll look for a couple of trades on it from today's price action. Type in what you want to see, something we haven't looked at yet. Okay, we got quite a mix here. Oh, interesting. Some 6Es popping up. Okay, 1, 2, 3, 4, 5, 6. A lot of crude oils. And a couple of 3, 4, 6Es. Okay, tell you what, we got, okay, what do we got here? We got about 10 minutes. Let's do this. Let's pop a crude. Let's pop a gold, because those two are in the room, and then they've got a couple of 6Es. All right, stand by. We're going to start with crude. I thought I had a crude chart here. Where in the heck did that crude chart go? Oh, here it is. Okay. I thought we looked at crude. No, I guess we didn't, huh? All right. Okay, let's look at crude. We'll pop a quick gold up, and then I'll see if I can sneak a little 6E in there before we run out of time. Okay? Let's do that. Okay, let's do a little exercise together on crude. Is everybody ready? Stand by. I'm trying to get it positioned correctly and cleaned up. I got all sorts of annotations all over this thing. Okay, here we go. What big announcement, Greg? GDP? Is there GDP tomorrow morning? Is it in the pre-market? Let's take a quick look here. There's been a lot of talk about the GDP. Most of you know, just before we go through the crude oil trades, everybody should know this, but I'll just show it anyway. This is our go-to site for financial news. Forex Factory has everything that affects all the different currencies all over the world. Tomorrow is Friday, July 27th. And this is your US dollar impact. Oh, yeah. Yeah, I think GDP and the pre-market is going to get things moving around, especially if they got a big, juicy forecast here. And I heard a lot of talking heads on CNBC talking to say it's going to be sub 4, like 3.1 or 3.5. So if that misses in a big way, well, here's the thing. Okay, heads up, 5:30 Pacific. You don't want to trade this. Okay, you want to give it 5-10 minutes before you go in and start trading this, because you could get violent reactions in the equity markets. See that? 8:30 Eastern, 5:30 Pacific, and we might get ripple effects into the morning trading session. Here's the Michigan sentiment. It shows medium impact, but sometimes you get some rock and roll coming out of this too. So, for a summer Friday, and you'll see what kind of tweets we get out of Trump overnight. Who knows? Now, what is the market condition of crude? Here is midnight last night. Here is the crude oil pits, most of course, open at 6 a.m. Pacific. So that's right here. 5:55 is when Gary opens the room. That would have been right about here. So this is what the market would have looked like going into it. Now, a lot of people ask this question. And the question comes up like this. Well, you know what, Charles? I hear all the good words you're saying to me, and you sound like a good person, but, how do you know in real time? You're armchair quartering this thing. You're looking at this after the fact. How do you know in real time what the market condition is, whether it's up, down, or sideways? How do you know? Well, let's go back here and answer that question. Here is crude going into the pit open. How do you know? What do you do? Is there anything you can do to this chart that will help you visualize what crude's doing? What might we do that would help us see what's going on? Is there anything we can do, or we just don't know? We're kind of like at the mercy of the chart. What do you think? What does Gary do in the room every day? Yeah, you draw your lines. You know what? If you take anything away from this webinar here tonight, this is probably the most important thing. I mean, one of the most important things is in the pre-market session, you draw your support and resistance lines. And here's how easy it is. You pick a spot where the top resistance is. You pick a spot where it looks like the support levels are. And we have an old saying in trading that is this: as long as it remains within the confines of these lines, we are said to be what? As long as it remains within the confines of the lines, we are said to be what? Range bound and sideways. So going into the pit open at 6, what did we know? What did we know? Did we know anything about this market condition going into it before the market even opened? What was this telling us? Yeah, sideways. So you can't tell me that you go into 6 o'clock in the morning and not know what the market condition is, right? You can do that on any chart. Any chart, you pull it up, and in the pre-market session, you put the line right here like you don't know, and you go back and you recreate it, and you put support and resistance lines in here. And if you're in a range, as long as it stays more or less within this range, you are said to be range bound. Now let's advance this chart together. And you tell me whether you think we've broken out of this range. Okay. You ready? Okay, here comes the pit open. Here comes the pit open right now. I'm going to start to advance the chart. Now why don't you type in like a B when you think the range has been broken and something has changed? You type in a B. If you don't, as I advance through the morning, if you think that we're remain range bound, then that would be R, remaining in the range. Ready? Here we go together. Okay, there's the open of the pit. Crude oil, 6 a.m. Pacific. Okay. There's 6:29. So there's 6:30. So 30 minutes into the pit trading. There's 7 o'clock, 1 hour pit open. I haven't talked about how to trade it yet. We'll circle back and talk about how to trade it. That's a separate subject. What we're trying to do right now is identify whether we are remaining. Okay, we got an R coming in from Mario, meaning his take. I see several R's, meaning that we are still in the confines of these lines, remaining within the range. Good. Okay, I'm going to pause right here. Now, it was encouraging to see everybody do this. Sometimes, occasionally, I'll see somebody think a breakout happens when this happens. Okay, this is just a head fake. That's all that is. Because remember, when support and resistance is an area of support and an area of resistance, right? It looks like this. We put a line here for simplicity's sake, but in reality, sometimes it's not going to go quite there. Sometimes it's going to touch it perfectly. Sometimes it's going to break a little bit and come right back. So it's healthy to think of support and resistance as areas around the line wherever you put it. Here's some more examples right here. Didn't quite get there, right? Didn't quite get there. Didn't quite get there. Poked a little bit through it. So you can't make the case that these little head pokes by a couple of ticks here and there constitute any kind of trend change or range breakout. So I'm encouraged to see that nobody said that the range had changed, because you know what? It didn't. It stayed in that pre-market range, the one that we identified before the pit even opened. You're still in it. Now, I'll circle back and we'll talk about how to trade it. The key here was to be able to see that you're still in the range, and you knew ahead of time what the range was, right? We knew that. Now, let's start to talk about how you might trade it. You can see what's starting to happen here if you make note of the breadcrumbs that the market leaves for you, because they don't just, market just doesn't come right up to you and knock you in the head and say, hey, you want to hit the buy button here? Markets don't do that, do they? They leave little breadcrumbs for you to follow, and you have to be starting learning how to pick them up. So if you start to look at these swings at support, what's going on right here? What's going on right here? Anybody can tell me what's going on right here? Tell the team what's going on. What is this? What's happening here? Is there any clues going on that we might want to think about here? Can you see it? Those four ovals? Is there any breadcrumbs being laid down here? Well, let me ask it in a different way. Are the retracements off this resistance area, are they getting all the way down to here now? Yes? No? Are they getting any higher? Are they getting lower? Are they going down to here? They're all getting slightly higher. What is that telling you? What is this telling you? Let me ask a more direct question. When you look at trading this upper range that it's starting to establish, do you think it would be prudent to short it at resistance? Or would it be better to buy it at support? She comes down here to support, you buy it. What's your primary mode of entry here? Buying or shorting? Sideways to up market. Are you buying it or are you selling it? Right. You're buying it. You're noticing here when she comes back to support, these are all good buy entries. I think Gary was calling these in the room this morning. I don't think I took any of these. I was mainly tied up with the equities most of the morning, but I think Gary was calling long trades off of support. He might have actually taken that line and put it up here. I think he did. I'm trying to remember. 16, does that sound like a number? He did have a line there, didn't he? He called the long in there? Yeah, okay, you're right. Yeah, he had a line right in here. And he was calling bounces. In fact, I think he was taking these, wasn't he? Yeah, he was taking those longs. Yeah. All right, so let's see how it panned out for crude. Stand by. Let me advance the chart. All right, so you're buying support, you're buying support, you're buying support. Okay, let me continue to advance. See what happens. Kissing the mid-band, kissing the mid-band. One more higher level of support. Kissing resistance. Uh-oh. Uh-oh, wait. What happened? What's going on there? 7:45 a.m. Pacific time. What's going on here? What the heck is this? Are we still in the range, or have we broken it? What say you, team? All right, so here's what I'm going to do. Here's how I'm going to approach this. I'm going to blow this up real big. And I'm going to ask a question. And then we're going to get off of crude. You caught that move, Eddie? Good for you. Did you buy the mid-band? Now I'm going to advance this chart. Everybody has seen that it has broken up. But if you didn't catch the mid-band bounce, you didn't get that. You tell me if there's another chance to get in. I'm going to advance this chart. And when you see another chance to get in, you type it in a C. Okay, you ready? Or T, either one for trade entry. Okay, here she pops the top. The traders who were paying attention to the breadcrumbs were already long from here. I know Gary got in long. Gary got in long either down here or here. I know he was in. But let's say you missed that. Okay, now I'm going to advance the chart, and you tell me with a C or a T, whether there's another chance to enter this trade. Here we go. Okay. Stand by. Type in a T if you think you see a trade. Pull this down a little bit. Top of that range there. Remember, you're typing in a T when you see a trade entry, because we're speaking to the traders who did not get long from here. You missed that entry. Now you're looking to get in. Okay, you're looking to get in. Okay, now you're at 750, getting long in the tooth. Long in the tooth. Long in the tooth. Wow, I am really blown away. Very small percentage of you actually got this. Either you're not paying attention or you don't see it. No, the T is not here. You missed it. Yeah, this is very definitely not the T here. This is the thrust part of the move. You missed it. Yeah, this is what you don't want to do. You don't want to get that. There's a small handful of you that typed in a T when these bars were forming right here, and you were correct. That was it. Does this meet the minimum criteria for trade retracement on an uptrend? Yes or no? Close below stealth, check mark 1. Close below line 6, check mark 2. Nice little box right here. If you draw it as I have it shown, you were filled a market fired order on the close of that bar right there long. Felt a little heat, and then she took off. It was a nice trade. And we closed the room, and that was it. Everybody see how you traded crude this morning? Any questions on that? Several chances to get long. A couple of scalp trades here in the range. Could have bought support down where we knew the support level was down here. Even if you missed that right after the pit opened in the first half an hour, you could have missed all that. You could have some scalpy longs here. You missed all that. You got in here. You missed that. You had another shot right here. 1, 2, 3, 4, arguably 5 long entries on oil.